And now we invite the long-awaited guest, actually, Koushik Chatterjee Group CFO at Tata Steel. Koushik, thank you very much for joining us. I believe you have battled some severe traffic to get here. Well, first up, what's the international steel scenario itself? Are you getting a sense that you're going to be bedeviled with lower steel prices for a goodish bit, which might put a lid on realizations?
Well, I think first of all I have to be careful because Abhay is sitting there and I need to ensure that I say the right things in front of him.
You don't say the right things to us when Abhay is not there.
No, but on a serious note, I think there is a recovery trend that is happening both in developed countries and in the emerging markets. And I think the trend, pace of that trend is rather slow because, and it is rather fragile because of the simple fact that you have the underlying economic conditions are still very, very volatile, be it in the Europe, in the UK, in the US, and of course in the emerging markets like Russia or India. So there is a trend which is on the improved curve, but the underlying strength of the domestic demand, and steel doesn't travel so much other than Chinese steel. So I think the issue is the resilience of this domestic demand and the way in which the demand will improve over the next 4 or 5 quarters or over the next 2 years is important to see. The other very important aspect which is influencing the performance of the entire metals and mining space on the ferrous side is actually how China plays up in its own, not only on the demand side but also on the supply side, because China is undergoing a kind of transformation in terms of the supply side restrictions, and especially in the context of the environment issues that has really come to the top of the table. And if it continues to look at rationalizing capacity, then it will certainly have come to a state of net addition being perhaps neutral where there are additions coming in, but there are closures also happening or closures being indicated. Some provinces like Hebei, etc. are making or are being made to make significant supply side corrections. The raw material situation is also very critical from a Chinese point of view, because a moderate China will have a different impact on raw materials like iron ore. Chinese own iron ore has an issue because at a certain price it will become unviable, and the environment regulations will put restrictions on usage of inferior iron ore in Chinese mills, so there will be more need for pellets, for example. So all of that will have some impact in the spread between steel prices and raw material prices. So if you really look at it, there is obviously a lag effect between the steel prices and the raw material prices and the steel prices, but that has kind of stabilized at a certain level. Both are at fairly moderate absolute levels, and I think therefore it would depend actually on the demand triggers rather than anything else at this point of time.
Right. So, no, very, very interesting points, Mr. Chatterjee, and I think you talked about spreads, because clearly I think in this environment that we are in right now, spreads probably matter much more than steel prices for steel company profitability. If we were to shift gears a little bit from what's happening internationally to what's really happening on the ground here in India, Tata Steel has got market leadership in the automotive steel market. How are you seeing the situation evolve over there? Because now, as we all understand, the entire expansion at Jamshedpur is up and running. So, while we were witnessing the transition, we had seen value addition get impacted because the CR and the HR had not yet been fully streamlined. So what's the situation over the next couple of months, particularly with the return of automobile sector demand?
So So I think as far as Tata Steel is concerned, I would say we have more been impacted by supply side constraints than demand side constraints, and I think the company has proven over the down cycle of the last 3 years that the demand side issues are much less because of the fact that our marketing and sales functions and our production and operating systems are very well aligned and kind of work much ahead of time in terms of understanding market needs and customer needs. So even though we have had a higher HR production because of the fact that our 3 million ton expansion was primarily in HR, but if you really look at the naked HR sales are not that high because we have several downstream opportunities where we have maximized. From an automotive point of view, I think we have shown that we could sell more to the automotive sector, even though the sector itself had muted growth and in fact a degrowth last year. So I think we would look at increasing our volumes as we move forward. Every year for the last 3 years we've been kind of increasing by about 800,000 tons to 1 million tons, and this year is also part of the fuller expansion of the 10 million ton in Jamshedpur or 9.7 million tons in Jamshedpur. So I think this is a good sign from an automotive recovery, because automotive recovery is very important not only for direct auto sales but also for the ancillary sector, and we supply them a lot. So I think we look forward to it. We see certainly signs of confidence coming back, and we will kind of orient our product mix towards the high value products like in automotive and engineering.
Right. I just want to mention that a couple of stocks are falling quite sharply at this point. So JP Associates is down about 10.5% on huge volumes at this juncture. The JP Group stocks are actually falling, and JP Power as well is down almost about 6.5% and huge volumes over there as well. But Mr. Chatterjee, just wanted to get your view on the Supreme Court ruling on the coal block allocation, whether Tata Steel will be impacted at all. I understand that at this point you all may not be impacted, but perhaps the future expansions, it would become a hurdle now. What would your assessment be on that situation?
Yeah, Sonia, I think at this point of time, from the deallocation perspective, our current operations do not get affected because they are very, very historical. I mean, I must say that Tata Steel, apart from being a 100-year-old steel company, is also a 100-year-old mining company, and including coal mining, and we've been doing this for many decades. What is important to understand, and perhaps disappointment to see, is that it needs to be seen from a case-to-case perspective rather than a blanket, because the faith in the system will really become fragile if after 20 years or if you look back on 20 years on everything and say things have not gone right on a blanket basis, not on specific basis, and that's I think the disappointment that we have. And the ground situations on many of these allocations are different in different cases. For example, we had an allocation which had issues in relation to compensatory afforestation, and Jharkhand doesn't have a land bank, and that's a struggle. Now if a judiciary comes and says that's cancelled because it's deemed to be illegal, without going into the merits of the case, it really is a disappointment, and it is also critical that how would one then plan investments in the country with a long-term perspective. So I think from current operations point of view on coal, we are not affected because we do have our mines operating.
But royalty will be higher, no, Koushik?
That's in the iron ore.
Okay, so it will overall take away something from your margins?
Yeah, there will be some impact on the margins on the iron ore front, not very significant from an overall tonnage perspective. Okay. But I think from a policy point of view, it is certainly not helpful in terms of long-term investment planning, and especially when one has looked at a certain configuration, because when you situate your plants at pitheads versus shore, you make certain conscious calls that if it is on the pithead side, then the logistics comes much more efficient from the pit to the plant, whereas if on the shore side you're looking at high quality imports, which has a different logistics play. But if it becomes a mismatch between a pithead plant with a requirement for imported raw materials, then that can affect the economics very badly. So I think there has been a conscious attempt in looking at what is best and doing things in following the guidelines laid down by respective governments. And therefore I think there is a huge amount of anxiety and disappointment on the fact that if one does not look at case to case but looks at a blanket deallocation process, it's going to affect future capital formation and investment confidence in the country going forward.
Yes, sir, that is a big fear, but the Supreme Court at the moment is indicating that perhaps they won't go with the blanket deallocation. Koushik, there are a lot of questions for you, but we are out of time. Thank you very much for joining us in this all-important conversation. It's a big day for us. Thank you very much for joining us. All right, actually just want to point out the JP Group stocks yet again. It's a fairly steep fall now, 13% down on JP Associates, and the other JP stocks also will come up for you.
There's actually been some promoter selling that's taken place. I understand that 3.3 crore was sold in the last 3 days. So JP Infra sold over 1 crore shares of JP Associates yesterday. So perhaps it could be because of that. The stocks in any case
sentiment hit the promoters, taking off his stake in the company, and that's a big knock that's coming in all the stocks. Now it's double-digit fall, percentage fall in all the JP Group stocks. Okay, we head for a break now, but still ahead, Sudhir Vasudev, former Chairman Managing Director of ONGC, joins in to detail the impact of diesel deregulation on ONGC. We will also be joined later on in the show by Mr. Milind Barve, Managing Director of HDFC Asset Management Company, to tell us this much awaited turn in fund flows with investor interest coming back into mutual funds.